Hi, everyone. I'm Christopher Thornycroft with Redwood Logistics, and welcome to the Redwood Rundown for the week of March 28th, 2022. Well, it's the end of the quarter, and usually at this point in time, we'd be talking about how freight volumes were rising for that end of quarter push, but we haven't seen it so far. As a matter of fact, we're seeing freight volumes decline as the war in Ukraine continues to rage on. The outbound tender volume index stands at its lowest point that it's been at since mid-July of 2020 at 13,496. As these volumes have declined, we've seen a slowdown in the spot market as well. Carriers are accepting their highest rate of contracted freight since June of 2020, as the outbound tender rejection index stands at 14.9%, and the DAT load to truck average has dropped all the way down to 3.89 to 1. Diesel has reached $5.18 per gallon, which is back near its record high of 2 weeks ago, a little bit over last week's, and that's really impacting drivers at the pump. The spread between wholesale and retail has come back down to earth, however, down to about 92 cents, which is right in line where it usually is, and far off the high of $1.71 where it stood on March 16th. So as these gas prices affect drivers, there's a couple of things that we want to talk about. One, there was a study that came out that was launched by the American Truck Business Service and reported that 2021's trend was that there was a higher net income by about 5.1% for drivers, and they were running on about 8% fewer miles. The deceleration of rates that we're seeing right now will cause drivers to have to run more miles to try to keep up with 2021's net income gains. Think about it if drivers start to get pushed out of this market because of high fuel costs, or if these companies that formed in the last year don't have pay structures that can accommodate a deceleration of rates and they have to shut on down. And then what happens to capacity? So there's a lot still going on. There's no linear trend that we're seeing right now. What we see is a market that is still extremely prone to volatility, although right now that volatility is pushing to the downside. That's all we have for the Redwood Rundown for the week of March 28th, 2022. Thank you all.